What has this year been like for you? Because you haven't really changed your approach and what you talk about, but boy, has momentum really come to you in a big way.
Yes, well, this year we started off very strongly. Innovation was on a hot streak, continued from last year, and then as interest rates doubled, nearly doubled over 1 quarter time, there was this fear of inflation and high valuation oriented stocks, and so we were hit with a bout of volatility. And you're absolutely right, Amber. Nothing has changed for us. So what actually happened is, if we use our 5-year price targets, instead of expecting a 15% compound annual rate of return, no promises here, compliance will be happy that I say that, instead of 15%, which is where we were at the peak in February, we now believe that our portfolios will deliver closer to 25% compound annual rate of return. Again, no promises, but all I'm saying is the bout of volatility did not change our price targets. They gave us a great opportunity to concentrate towards our highest conviction names.
Talk to us about the methodology of those price targets, because 5 years is a long time, especially for a company like Tesla. You've got a $3,000 price target in 2025. I mean, just using basic CFA modeling, how do you arrive at that? What is your methodology to get to these numbers with companies that are new, unproven, and working in completely new areas that didn't exist a couple of years ago?
Right. Thank you for that question, Amber. Our research starts from the top down. We take a white sheet of paper, first principles research. How is an autonomous vehicle going to work? That was a question we started with in 2014, for example. And what we are doing is following these new technologies, and in this case, first, breakthroughs in battery technology. And we're trying to figure out, are we at the point where the technology is ready and the costs are low enough to launch an exponential growth trajectory? And in the case of electric vehicles, for example, with Elon Musk's advances in battery technology, particularly battery pack systems, and now batteries as part of the infrastructure of the car, we see costs dropping to such a low point that in 5 years, the average electric vehicle, we believe, will cost $18,000, that's US dollars, compared to a Toyota Camry, which will still cost somewhere in the $25,000 to $26,000 range. So what we think we're going to see is exponential growth in the auto sector when it comes to electric vehicles for the first time in 100 years. Autos have been in a very mature state. This new technology is causing exponential growth in a sector that most people think is very mature. So it's a different way of thinking about the world, looking for these new exponential growth opportunities, modeling them out, seeing how fast they are likely to happen as costs and prices fall.
Your view on Tesla, perhaps more than any other, evokes a really visceral response. And I know you go back and forth with Elon Musk on Twitter a lot. I'm curious, what kind of access do you have to Elon Musk? Are you talking with him about these ideas? Are you a distant admirer? What is this relationship like between you and Musk?
I think people would be very surprised at how little Elon Musk and I talk. The first time I had a one-on-one with him, for example, was March of 2019 when we did a podcast with him. He liked what we were doing in our research. We push our research out into social media. He saw some of our research on battery technology and autonomous vehicles, and he DM'd our analyst. He didn't DM me, he DM'd our analyst, rightly so. And she, Tasha Keeney, automatically DM'd him back and said, "Can we do a podcast with you?" So that's the first time we met. And we've talked very few times since, but we know he responds to our research as we're pushing it out there. There's no selective disclosure on our part, and there's no selective disclosure on his part, because we're out there on social media talking about these very exciting new technologies.
All right, let's talk about the new shiny object today, which is Coinbase. The reference price is $250 per share. We're getting indications that it could open at $340 per share. Do you have a price target for Coinbase?
We do. I am reticent to give it. It is far above where it's going to open, we think. Now, there are a lot of assumptions in there, and you want to talk about volatility, just look at a chart of Bitcoin. There's going to be there are going to be great opportunities between now and 5 years to buy on dips, we believe. I have no idea where it's going to open. We were trying to figure that out ourselves today. We do believe, however, that it has miles to go because institutional interest in Bitcoin alone, which is the largest cryptocurrency out there, is, we think, going to add up to $500,000 to the price of Bitcoin. And when I say that, we've based this on a study focusing on what institutions are looking for. They're looking for low correlations of returns. This is a new asset class. So institutions are interested, they are moving in. And if they add up to 5% in their asset allocation to Bitcoin, that alone could be up to a $500,000 increase in the price. So we're at the very beginning of what we believe is going to be a long and exciting journey.